Good people, welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. Please don't get yourself scammed. It is scam season, so be very careful of impersonating scammers. Trying to impersonate me, slide into your DMs, and asking you to send them money. I don't do that, guys, so please be careful. Don't fall for the oldest trick in the scam book. Don't fall for the oldest trick in the scam book, which is sliding into your DMs, pretending to be me, asking you to send them money to trade for you. That's the oldest trick in the scam book, so don't fall for it. If you want to keep up with me when I'm not on the airwaves of YouTube, this great platform YouTube, do me a big favor. Get down to the description box. Click on that Richard Fain Millionaire Mentor Instagram link and give me a follow. Give me a follow. And then send me a DM to let me know that you're rocking with me. And then, of course, I'm going to say thank you because I appreciate y'all so much. Because y'all could be anywhere else in the universe, the YouTube universe, the TikTok universe, the Instagram universe. Y'all could be anywhere in the internet universe. And you choose to be here with your boy, Richard Fain. Thank you so much. I am so privileged to have such wonderful subscribers. Well, most of y'all. Most of y'all are wonderful. We got a few that are not so wonderful. But we're going to be positive, right? We're going to put positivity into the world. So what we got going on today is something monumental, guys. We got the Federal Reserve getting ready to do what? Cut interest rates. And they have not done this in what? 4 years. They have not cut interest rates, guys, in 4 years. This is monumental. This cancels the recession. It completely cancels the recession, in my opinion. It also triggers a massive wealth transfer for those of us that want to participate in this wealth transfer. So it does two things. Interest rates going down today do two things. Number one, they cancel the recession. Number two, they trigger a massive wealth transfer. We're going to talk about that in a minute. But before we do, y'all know I got to take care of a little bit of business. Business. Not business, business. If y'all old school, that's how my grandparents used to say it. They say business. They don't say business. It's business. We're going to take care of a little business, and then we're going to dive into the meat and potatoes. So stick around. Stick around. First thing up on the agenda, wealth builders. Y'all see the t-shirt. You see the t-shirt. For the last 3 days, I've been wearing these wealth builder t-shirts. Ain't that cool? Guess what? We got a whole community called Wealth Builders on the Patreon platform. Whole community, almost 1,100 wealth builders. If you want to be a wealth builder and join our financial community, which is the fastest growing financial community on Patreon, get down to the description box and click on that second link in the description box. Richard Fain Millionaire Mentor website link. Get yourself over to the website. We got digital products that can help you collapse time frames, get your education level up, get your confidence level up, get your execution level up. Appreciate you, Tracy, popping in. Thank you. That's a wealth builder. That's a wealth builder popping in. Now, any wealth builder that pops into this live, please put down in your little comment, wealth builder. Just type wealth builder in there so that people know that you are a wealth builder. Just put wealth builder in there. Just type in wealth builder in the chat so folks can know that we got some wealth builders in here representing. And I brought my wealth builders with me so that they're gonna be moderators in here for me. Look at all them wealth builders we got in here. Come on, man. Look at all them wealth builders we got in here, man. See, my wealth builders are gonna be moderators. So for any of you soybean millionaires, get out of soybean billionaires, not millionaires. Any of you soybean billionaires get out of control today. I got a whole, look at all them wealth builders in here, man. Do y'all see all these wealth builders in here? Any of you soybean billionaires get out of control today, y'all gonna have to deal with them wealth builders. I'm just telling you now, it's gonna be friendly now. We're not doing nothing stupid. But if anybody get out of control, my moderators, who are my wealth builders from the fastest growing financial community on Patreon, will be in here to moderate. So just know that. Well, all right then. So if you want to join Wealth Builders, like I said, get down in the description box, click on that Richard Fain Millionaire Mentor website link. And then when you get there, check out the digital products and then hit that membership button or that join button and get yourself over to the Wealth Builders and join the fastest growing financial community on Patreon. You see all these wealth builders in here today. We represent, baby. We come strong and we're building wealth. How are we building wealth? Traditional investing, buy and hold, big boy blue chip, long term. That's wealth builder. That's wealth builder. That's what we do. That's what we're going to be doing here over these next 10 years to transfer massive wealth to us. And it starts today. Last thing I want to do before we get into meat and potatoes, because we got a little bad weather rolling in here in Florida, so I don't know if my little internet connection gonna get raggedy or not. But until it does, we're gonna talk some business. But before we do that, let's get on Moomoo real quick. Guys, if you want to use a Moomoo brokerage app, that's what I use. Link down in the description box. Now, the good folks at Moomoo are gonna give you up to 15 free stocks when you try out their Moomoo brokerage app. That's what they're gonna give you for free. Now, here's how you get the free stock. When you open the Moomoo brokerage account, if you put $100 in, you get 5 free stock. If you put $1,000 in your new Moomoo brokerage account, you get 15 free stock. Big boy stocks. They're publicly traded companies, guys. And then guess what you are able to do then? Now you're in position to do what? Take advantage of this massive wealth transfer that's getting ready to happen starting today when rates get lowered. Federal Reserve is lowering rates today. They haven't done it in 4 years, guys. This is finna trigger a massive wealth transfer over the next 10 years. I believe that. So in order for you to participate, you gotta have a brokerage account. So get yourself down in the description box and click on that Moomoo link and get you a brokerage account set up today. Put you some money in it. And then I'm gonna send you tutorial videos to walk you through how to use it. All you gotta do is send me an email to my website, www.richardfain.net. Second link down in the description box. Same website, you're gonna join the Wealth Builders. Send me an email through that website and say, Richard, I opened my Moomoo account. I funded it. I'm ready to transfer this wealth to myself and my family. Send me those videos so I can learn how to use this Moomoo app. And then also send me your wealth transfer blueprint 1.0, 2.0. to walk me through what you're doing. So if I want to copy your plan, I can, or I can create my own plan. Remember, I'm not a financial advisor. I'm just a guy on YouTube, but I'm a guy on YouTube that has been buying big boy blue chip paper assets for 30 years. And I got a really good net worth through doing that for 30 years. So I do know a little something about a little something. I know a little something about a little something. See? When you know a little something about a little something, you can build some wealth. If you want to know a little something about a little something, get down to the description box and click on that Moomoo link and sign up. And then send me that email, and I'm going to give you a little something so you can learn a little something. And then you can build you some wealth, right? All right, let's dive on in. So today, guys, we got the Federal Reserve concluding their 2-day meeting. They started yesterday, the 17th, Tuesday. They're finishing it up today, the 18th, Wednesday. And then at 2 o'clock, they're going to come out on record lowering interest rates. Well, how do you know that's a guarantee? I don't know it's a guarantee, but I know what I believe they're going to do. And that's reduce interest rates. What I don't know is how deep the discount is going to be, how deep the decrease is going to be. I don't know. I don't know if it's going to be 25 basis points or 50, but it don't matter. It's still going to trigger a wealth transfer. It's going to trigger it. And I'm going to tell you how it's going to trigger it here in a second. So we got that coming out at 2 p.m. Eastern time. So no matter where you're at in the world, guys, synchronize your watch, synchronize your phone, synchronize something, right? Do something, however you tell time in your part of the world, synchronize it. For 2 p.m. Eastern time, United States time, the Fed coming out with big boy news. See, a lot of people say, buy the rumor and sell the news. Well, that's all good and dandy, guys, when you're a billionaire. See, billionaires talk like that. Regular common folk don't talk like that. I'm gonna buy the rumor and I'm gonna sell the news. Oh, that sounds so good. But billionaires talk like that. People that are rich that have information you don't have. See, I can't buy the rumor because I don't hear no rumors. Well, what am I buy? See, this is how rich people talk. This is how wealthy people talk. This is how 1%ers talk, because they have insider information. So they can buy the rumor because they get the rumor. I don't worry about none of that goofy stuff. What I worry about is buying big boy blue chip paper assets. I buy them, I hold them for long-term growth. And guess what's getting ready to happen when interest rates go down? Growth stocks go up. Go check a look at history. Go do a little bit of research on history. When interest rates come down, growth stocks go up. So I don't know nothing about no buy no rumors, sell no news, all these old little cliches the rich people use and the 1%ers use and the Wall Street traders use. The Wall Street aliens use that kind of terminology. I don't use that. What do you mean buy the rumor? What the hell is that? See, this is how they trick y'all into thinking y'all know more than you really know. This is how they control you. Oh, I hear people all the time in different parts of social media. I'm going to buy the rumor. I'm going to sell the news. I guess that makes you a real trader. I guess you feel better about yourself that you're a real trader because you know some of their little terminology. No, that don't make you a real trader. Because we already know 99% of people that try to trade, they lose money. History tells that. Statistics tell us that. So what you need to do is forget all this buy the rumor, sell the trade crap. Buy the rumor, sell the news crap, and just get yourself in a traditional position where you're buying big boy blue chip. You're holding them long-term and letting this thing mature. Guess what's getting ready to happen when these rates come down? Growth stocks going up, baby. Now, it may not happen overnight. It may not happen overnight, because if you look at the market right now, let's take a look at Nvidia right now. If you look at Nvidia right now, it's at 115.36, slightly in the red. And this is what? Several hours before the good news. So sometimes the good news comes, nobody don't believe the good news right away. It takes a little time for the good news to set in. But we know this. History tells us this, guys. When these rates come down, at some point, the S&P goes higher, growth stocks go higher. That's what history tells us. Go look at the last 2 times there were rate cuts. Go back to March 2020. Go back to August 2019. Those were your 2 last rate cuts, and see what happened to the market. Just go look at the history, man. Go do your research. When I say research, I mean Google. Go do a Google search on the last 2 rate cuts and see what happened to the stock market. The first one, which happened the last 2. Let's take the last 2. Let's take March 2020. That was the most recent rate cut. March 2020, right? Guess what happened to the S&P 500 12 months after that rate cut? Can somebody tell me what happened to the stock market? Can one of the wealth builders chime in and tell me what happened to the stock market 12 months after the March 2020 rate cut, what did the S&P 500 do from an ROI 12 months later? I got time. I got time. I got time today. Somebody, come on, wealth builders. Come on, wealth builders. Help me out here now. What did the stock market do 12 months after the March 2020 rate cut? I'm going to give you a little hint. It did about a 27% ROI in the next 12 months after the rate cut. That's what it did. Let's go to 2019. Let's go to August 2019. 12 months after that rate cut, what did the S&P 500 do? 10% ROI. My point is this, guys. History is on our side. I don't care what the buy the rumor, sell the news, all this stuff that these people, these 1%ers who trying to control you, try to get you to believe. Oh golly, I'm a real trader now because I bought the rumor. What rumor? This ain't no rumor. This is inside information these people have. They're billionaires. They're well connected. They already know before it happens. That's their rumor. You ain't gonna know no rumor. So forget all of that. I'm telling you what's going to happen from what history says. History says 12 months from now, the S&P 500 is going to be higher than it is today. So guess what? If I'm trying to transfer wealth to myself, guess what I should be doing? Guess what I should be doing today? Guess what I should be doing over the next 12 months? Big boy blue chip. Because history says it goes higher within the next 12 months. Last two rate cuts, guys. This ain't what Richard Fain is making up. Go do your homework. Get out on the internet. When I say internet, I mean Google. Get out on Google and do the research. I ain't got to lie. The last two rate cuts that the Federal Reserve did, 12 months later, the S&P 500 gained. It climbed. It bounced. So if I'm just a regular schmegler out here trying to transfer some wealth to myself, and I know a rate cut is getting ready to come, and I got 12 months to buy big boy blue chip and get my slice of the wealth transfer, guess what I should be doing? I should be buying. Now, again, I'm not your financial advisor. I'm not trying to tell you what to do, guys. I'm just telling you what history says. Now, y'all in here because you said you want to transfer some wealth to yourself. If you're really in here to transfer some wealth for yourself, I'm telling you what history says is getting ready to happen right now today when 2 p.m. Eastern time hits. That's what history says. I don't know nothing about no buy the rumor, sell the news. I don't know what that means. Some of you soybean billionaires might know because you're well connected. You got privilege to I'm gonna listen to something. Listen, man, regular common folk, this whole notion of I'm a buy the rumor and I'm gonna sell the news. I just get so tickled when I hear people say that. And even over on the wealth builders, I've seen it a couple of times where I'm gonna buy the rumor and I'm gonna sell the news. And I just laugh and I'm thinking to myself, what the hell what are we talking about here? Are we really using terminology from billionaires, from hedge funds, from Wall Street aliens? That's what Wall Street aliens say. This is what billionaires say. This is what people who have insider information say. Not regular people trying to build wealth. What rumor? You think you're going to hear a rumor that something's going to happen 6 months from now and you're going to get ahead of it? Come on, guys. This is what billionaires do. This is what Wall Street aliens do. Normal people that are trying to build wealth. You got to look at what's really happening. And I'm telling you right now what's getting ready to happen because it already has happened the last 2 times the Fed has cut rates. I don't care if they cut them 25 basis points. I don't care. Oh, if they cut them 50, that's going to tell the market that the economy's in trouble. So I'm not going to invest. Don't invest. Sit your butt on the sideline for these 12 months and miss your blessing. Miss your wealth blessing because you listening to some idiots on Wall Street. Go ahead and miss your blessing. Go ahead and miss it. Sit your little self right over here and listen to these Wall Street aliens. No, I'm gonna wait until I'm gonna buy the rumor before I'm gonna buy the rumor, and then I'm gonna sell the news. Keep listening to these Wall Street aliens and you're gonna stay broke. I'm telling you guys, you better look at concrete evidence. 12 months from now, according to history, the S&P 500 is gonna be higher than it is today. And I ain't gotta be no rocket scientist to figure out if I can buy today at 5,600 points, and then it goes up 20% in a year, could go to, listen, the last time they cut rates in the next 12 months, the S&P went up 27%. So I know some of y'all think, oh, this guy's silly. He don't know what he's talking about. 20%, that'll never happen. Well, it happened already. It happened the last time they cut rates, which was March 2020. 12 months, it went up 27%. This ain't me saying this, guys. This is history. How you gonna go debunk history? Don't debunk me. I'm just giving you history. You can believe it, don't believe it. Don't. I'm just telling you what's getting ready to happen. So you can go ahead and listen, or guess what? Don't listen. There you go. Doesn't matter to me. I know what I'm doing, and I know what the wealth builders are going to be doing. And we're in here today. The wealth builders are in here today. So the wealth builders, I know what they're going to be doing. I don't know what the rest of y'all going to be doing, but I know what the wealth builders are going to be doing. We're going to get in where we fit in. Because we know in 12 months, 18 months, 24 months, our net worth is going to be higher because of our activities today. See, our decisions today will tell me where I'm going to be in 24 months with my net worth. Right? See, my decisions today, my actions today, my execution today in the next 12 months will tell me where I'll be in the next 5 years. Yeah, because I'm telling you guys, over the next 12 to 18 months, the rate's coming down by 200 basis points. So you can sit up here and buy the rumor, sell the news, whatever that means. You go ahead and listen to these guys. You're going to miss your financial blessing. Go ahead and listen to them. Go listen to them. Here's a little piece of something I want to run through with you guys. Here's a little something. Here's a little something. The fresh records for the S&P 500 and the Dow during a historically tough period for the market. So here's what they're talking about here. September has been the worst month for the benchmark over the past 10 years. When they say benchmark, guys, we're talking about the S&P. See, that's the broader stock market, right? That's the broader stock market. And in September, normally, guys, it's a terrible month for the stock market, for the S&P. Over the last 10 years, it's been down by 1.3%. Over the last 10, it's been down. It's always been down over the last 10 months. But guess what happened yesterday? Guess what happened yesterday? Guess what happened yesterday to the S&P? It hit an all-time high intraday in September. Why do you think that's happening when history says it's terrible September? I'm going to tell you why it's happening. Because optimism and FOMO is coming. When these feds start lowering these rates. Now, listen, guys, I'm just telling you over the next 12 months, I believe the S&P is going to be higher than it is today. I don't know what's going to happen in the short term. I'm just telling you what happened yesterday. See, you can't argue with history. You can say whatever you want to say, but the S&P hit 5,670.81 yesterday. That was an all-time high in the whole history of the S&P 500. Don't tell me what can't be and what can't happen, guys. You can listen to these Wall Street aliens if you want to. Now, they're going to manipulate things because that's what they do. But let's not get it twisted. Go look at the S&P 500 on January 1 or January 4, whatever the first business day of 2024 was. Somebody go in the chat and go look at that, what the S&P was, please. Somebody do me that favor. One of the wealth builders. Go look at the first business day of January 2024 and tell me what the S&P 500 was trading at. Because I gotta give historical data on this channel. I gotta give you historical data. The data don't lie. I don't care what these Wall Street aliens tell you. The data doesn't lie. What was the S&P 500 trading at on, let me go ahead and get that date for you. What was the first date, the first business day? I went back too far. A little too far there, buddy. Let's see. What was the first day? Was that the second? Yeah, I believe it was January 2nd. So go to January 2nd, 2024. I think it was January 2nd. Maybe that wasn't. Yeah. January 2nd. Was that a holiday? No. So January 2nd, 2024. Go see what the S&P 500 was trading at. See what it was trading at on that day, please, somebody. I'm gonna guesstimate it was in the 4,900 range. I'm gonna guesstimate it was in the 4,900 range on January 2nd. Matter of fact, I'm gonna do my own research. When I say research, I mean Google. Let me see here. What was the S&P 500 on January 2nd, 2024? When I say research, I'm going to, okay, I don't need to know. I don't need to know I just need to know what it was. I don't need to know all that. I don't need to know all that. My goodness, man. Come on, Google. Just give me the points. I'm going to estimate, guys, it was about 4,900 points because I'm having problems with my research team. When I say my research team, I'm talking about Google. I'm having a problem with my research team. So I'm gonna say it was about 49. I'm gonna say it was about 4,900 points. Guess what it is today? Guess what it is today? 5632. Maybe it was 47, but somewhere between 47 and 49. I can't figure out what it was. But somewhere between there, guess where we're at today? 5633. Now, who's going to sit up here and tell me we're not having a good year? I'm having a good year. I don't know about y'all. I'm having a great year. I started at 47, 48, 49, and I'm all the way up to 56, almost 57. That's almost 1,000 points in 9 months. So keep listening to these Wall Street aliens. Y'all go ahead. Oh, I'm not going to put my money in. I'm going to keep it in the money market, and I'm just going to wait. You just lost 1,000 points in the S&P 500 by sitting on the sideline listening to these aliens. Keep telling y'all, man, you better get in the market and stop trying to time the market. That's what I want you guys to get this. If you'd have been sitting on the sideline, which a lot of y'all were, you just missed 1,000 points in the S&P. By doing what? I'm going to buy the rumor. I'm going to buy the rumor and sell the news. Problem is you don't know what you're doing. You're trying to be a Wall Street alien, but you got no resources. You don't know what you're doing. What you probably want to do is just be in the market. Dollar cost average in to big boy blue chip, you'd have been up 1,000 points right now today. Yep, you sure would have. You sure would have. See, I don't care what you say about me. My 30 years of experience tells me exactly what to do. And guess what you can't take from me? I'm up 1,000 points. My SPLG is up. My FTEC is up. My Mag 7 is up. My Nvidia is up. Everything's up. Nothing's in the red. Everything's up year to date. So you can say what you want to say. All of my picks are doing great. Now, if you don't believe me, go look at them yourself. Matter of fact, you ain't gonna have to look at them. I'm gonna pull it up for you. Let's go. I'm gonna pull it up for you. Because see, I just want my folks to understand traditional investing is the way to go, guys. And I'm gonna tell you why it's the way to go. Just listen up here real quick. This is why traditional investing is the way to go, guys. I'm no expert here, far from it. But that should give you hope I'm not an expert. I know nothing about stocks. And look at my picks. I know nothing about stocks. And here are my picks. Here's the SPLG for the year. Here's SPLG year to date. 19.06%. That's year to date, guys. That's through September 18th. That's year to date, almost 8.5 months. I got an average rate of return on my SPLG, which is my S&P 500 ETF of 19.10. Oh, you just picked that. No, I didn't. Go back and look at the history on the channel. Go look at the live streams. Go look at the edited videos. I've been in this thing the whole year. And guess what it is? 19.10%. And I know nothing about stocks. And I'm up 19%. Okay, that's one. Let's go to FTEC. See, I ain't got to sit up here in front. Proof's in the pudding for me. FTEC. And the only reason I'm telling you this is because I'm trying to get you to understand what's getting ready to come. Here we go. Let's look at FTEC. Let's look at FTEC year to date. Ooh, 20.20% year to date. So, SPLG 19%, FTEC 20%. Now let's dive into the Mag 7. And we're going to take them one by one. One by one, because I want y'all to understand what's really going on here. And this is from a guy that knows nothing about stocks. Here we go. Year to date. So let's start with Apple. 19.07% year to date. This is my Mag 7 I'm taking you through because y'all know I got a 50-30-20. 50% SPLG, 30% FTEC, and then 20% Magnificent 7. And then I got the big boy stuff that I do out of the lump sum money. But we'll get to that in a second. So here we go. First of the Mag 7, 20% rate of return on Apple year to date. Bam. And I know nothing about stocks. Nothing. I don't know nothing. Let's go to number 2, which is Microsoft. See, because I know nothing about stocks. I don't know nothing about nothing. I'm just a guy on YouTube trying to make some YouTube revenue. I don't know nothing. Oh, here we go. Here's Microsoft. 16.48% year to date. Okay, let's keep moving. Let's go to number 3. Let's go to Meta. Let's see what Meta's doing because I don't know nothing. I'm just a guy on YouTube. A monkey can pick stocks better than me. Here we go. Do I need to tell y'all what Meta is doing right now in my Mag 7 portfolio? 55.28%. Yes, it is. Let's keep going. Let's keep going because see, y'all gonna get this understanding in a minute. Let's go on to number 4, which is Amazon in the Mag 7. Let's go to Amazon and see what old Amazon's doing year to date. This is 8.5 months through the year. Since I don't know what I'm doing, I'm just a guy on YouTube, don't know nothing. 24.84%. That's all I'm doing on. Let me keep going though, because I want to go through all of them. I don't want no misinterpretations. Let's move on to Alphabet. Let's move on to Alphabet. Let's see what Alphabet's doing year to date. 8.5 months through the year. 15.17. 15.17. Now let's keep moving on. Let's move on to Tesla. Let's move on to Tesla. Let's see what Tesla's doing. Okay, I'm down 7.64% on my Tesla Mag 7 DCA. So I'm a negative on Tesla. Okay, see, didn't know what I was doing on Tesla. So I missed on Tesla. Now, let's see what the 900-pound silverback gorilla did, which would be Nvidia. Let's look at that one. Let's see. I'm just curious because everybody's talking about it's such a terrible stock and it's overrated. It's not going to do anything. It's done. All this other crap. Oh, just 139.42% ROI year to date, 8.5 months through the year. So let me make sure I get this right. So My SPLG is 19%. My FTEC is 20%. And just do the math on the Mag 7. I'm not going to do the math on it because I already know what the numbers are astronomical. I'm at least 35, 40% on the Mag 7. When you blend them all 7 of them, you blend them, I'm at least 40% on that. So when you blend the portfolio 40, 20, 20, what's the portfolio right now? About 25% year to date when you blend it all. I know it's weighted and all that stuff, but I ain't worried about all that. Let's just blend it. Let's blend it and see what my blended is. And I'm just taking this off the dome. I don't know. I'm probably higher than this, but let me give you my blend. Let me give you my blend. 19%, 20%, and let's just say 40%. Let's divide that by 3. So I'm about a 26, 27% ROI. And I know some of y'all, well, goddamn, QQQ, I did 35%. Well, kudos to you. Thank you. Good for you. But for me, 25% compounded on the type of money I got in these investments, listen here, man, it's going to be a lot of wealth transfer. And that's just 8.5 months. What do you think is ready to happen in the next 12 months when they reduce these interest rates by 200 basis points? What do you think is going to happen? Now, I got this, and the interest rates was the highest they've been in 20 years. And I got a 26, 27% return on my money. What do you think going to happen over the next 12 to 18 months when they reduce this interest rates by 200 basis points and they introduce that new money supply to the economy where then businesses can start borrowing money cheap and investing it in growth, and growth stocks go up? See, that's why growth stocks go up, guys, when interest rates go down. It just give you a little bit of history on this. See, when growth stocks do bad, that's because they can't borrow money to invest in their growth. That's because interest rates up. But see, when interest rates come down, guess what growth stocks can do, or growth companies? They can go borrow that money, take that cheap money, they can throw it into AI or whatever they want to throw it into, and they start growing again. Once they start growing again, what does investors do? They want to hitch their wagon to a fast-growing company because they can make money. So now you got investors that are going to come back and hitch their financial wagon to this thoroughbred because this thoroughbred just got a whole bunch of new food. And that new food is money. And they're going to take that money and they're going to put it into growth and they're going to grow the company. And guess what investors are going to do? They're going to go right along with them. And when investors come back, what happens to the stock price? Goes up. That's just a little bit of 101 stock market, guys, from a guy that knows nothing about the stock market. That's a little 101 from a guy that knows nothing about the stock market. But I do understand companies and I do understand our economy. So I don't have to know anything about stocks. See, all I need to know is people borrow money to buy things. And when money is super cheap, AKA 200 basis points cheaper than it is today, what do you think people go do in this country? They go borrow that money. What do you think companies do? They go borrow that cheap money and they put it into something. And that something is called the economy. And guess what I do as an investor? I hitch my wagon to these companies. So now I've already hitched my wagon to my 50, 30, 20 pre-rates coming down. What do you think this 50, 30, 20 going to do post rates coming down? What do you think it's going to do over the next 12 to 18 months when we reduce these rates by 200 basis points? I know what it's going to do. I may have a 50% return. I don't know. You tell me. What does history say? What does history say about the last 2 rate cuts? I've already talked you through that. What does history say about the last 2 rate cuts? Somebody, anybody, everybody, anybody, somebody. Anybody know what did rates do? I just told you. Bingo. What does rates do to the S&P? 27% and 10%. Good stuff. I love it. So let's keep moving. Traders also overcame late summer headwinds stemming from concerns over the health of the U.S. economy. And here's the part about the recession being canceled. For some of you who like to look at the video title and complain about stuff, here's why I said recession is canceled. I'll tell you why right now. Traders also overcame late summer headwinds stemming from concerns over the health of the U.S. economy. Disappointing jobs and manufacturing data in August sparked a large one-day sell-off, aka Black Monday, August 5th. That's what they're talking about, aka Black Monday. However, equities were able to rebound due to more constructive data releases and expectations of the Fed lowering rates. So what happened? Black Monday happened, but guess what? Before the end of the month, we had fully recovered from Black Monday. Why? Because more data came out supporting a healthy economy, right? That's what happened. More data came out. One piece of data that came out was the GDP numbers for Q2. Another piece of data that came out were retail sales for July. And you just got retail sales for August. So you got GDP going up. Guess what else you got already? You got an estimate from the Atlanta Fed. They have an estimate out for Q3 GDP. And guess what that is? 2.5%. So this notion of we're going into a recession has been debunked. Guys, we got a soft landing. Go look at the data. You ain't got to believe me. Go look at the data. So this whole, if they cut it 50 basis points, that means we're probably headed into a recession. No, it's not. That's been debunked. Atlanta Fed came out with projected Q3 GDP at 2.5%. If you look at the retail sales data for August, it don't suggest that we're in a recession. It suggests that retail sales are up when the experts thought it would be down. Go look at the data, guys. A lot of y'all just read headlines. You don't read the data. You just read the headline. Or you listen to your favorite YouTuber. Or your 15-year-old TikToker. That's where you get your financial information from. So here we go. Traders also overcame last summer headwinds. We talked about that. Wall Street is on standby for the Fed's long-anticipated rate cut Wednesday after a move that could boost earnings growth for companies following a backdrop of steep borrowing costs and high inflation. I just told y'all that, right? See, I told y'all when these companies are able to borrow money cheap, they take that money and put it in growth. That's why growth stocks go up when interest rates go down. Typically, growth stocks go down in value when interest rates go up because they can't borrow money cheap. So they don't grow. No one's going to invest in a growth stock that doesn't grow. Not major investors. They're just not. But when it's time for them to grow again, like I told y'all, they're going to rotate back into these companies because now they're going to start borrowing. Listen, man, over the next 18, listen, next year this time when rates are down to 3.5%, Fed funds rate, 3.5, 3.75, you watch how much money is going to be borrowed and how much these growth stocks are going to move. They're going to start moving. You know people cannot wait, man, to get this cheap money to invest in chips, to build out AI. I told y'all yesterday, AI is going to take over everything. Every sector, every industry will have AI doing something for them. And you're going to need chips. And y'all already know the 900-pound silverback gorilla got a waiting list right now of people wanting chips that they can't get to them. Hyperscalers going to get theirs first. And then you got to get in line. That's why companies like Broadcom, AMD, other companies that semiconductors can make money too. Because everybody can't get Nvidia chips. Everybody can't afford Nvidia chips. So you got all the rest of these companies that makes good chips too. They're just not the Mac Daddy chip. They're the baby daddy, not the Mac Daddy, the baby daddy chip. The Mac Daddy chip is made by Nvidia, the 900-pound silverback gorilla, right? So Wall Street is on standby for the Fed's long-anticipated rate cut Wednesday afternoon, a move that could boost earnings growth. I just gave you historical data supporting this, guys. What else do you need? I just told you the last 2 rate cuts. What happened to the S&P 500? So if you're sitting here thinking, oh, golly, this guy talks about wealth transfer. How do I do that? I just told you how to do it. What, you want me to come knock on your door and grab your hand and show you how to do it? I just told you how to do it. I just told you what's going to happen based on what history says. Now, you can sit here and listen to these Wall Street aliens, and you can sit here and listen to these soybean billionaires all you want to. Go ahead. I'm telling you what history says. You can't debunk that. It's history. It's in the book. It's in the book. March 2020, a year later, it's in the book. Go do the research. When I say research, I mean Google. My research team is Google. That's my research team. That's a $1 trillion research team for free. I get them for free. They're cheap labor. You should try it. You can get $1 trillion research lab for free. Some of y'all need to try that. Go hire Google for free to be your research institute. That's what I do. Oh, Richard, how many people on your team that do all your research for you? I got $1 trillion research team, and it's for free. Don't cost me nothing. Y'all might want to try that. $1 trillion research team. As a matter of fact, it ain't $1 trillion research team. It's about a $2 trillion research team because it's Google. They're about a $2 trillion company. And a lot of that is due to the search engine. So I got a $2 trillion research team working for me for free. I mean, come on, man. Where are you going to get that? Where are you going to get a $2 trillion research team that goes to work for you for free? Come on, man. See, this is what I keep telling y'all, guys. We got to use our financial tools. Google is a financial tool. Richard, how do I do this? Go to the $2 trillion research lab. That's what I'm going to tell you from now on. Go to the $2 trillion research lab. They will tell you everything you need to do. Y'all know I get all of my information from the $2 trillion research lab, right? And it's for free. Nope. There ain't no usage fee. It's free. So let's keep moving. Let's keep moving. Let's keep moving. Let's keep moving. Let's talk about the latest retail sales. This is what I want y'all to understand. So the latest retail sales data included solid consumer health. Retail sales rose 0.1% in August versus economist estimates for a 0.2% decline. So what does that tell me? Just as a regular guy trying to build wealth, and I'm thinking about what's going on with the future of our economy. What's going on with the recession? Is there a possibility of a recession? It's always a possibility of anything, right? But what's the likelihood of it? Let's think about it. So we get August retail sales data that says retail sales is going up. Is that characteristic of a recession? I don't think so. I'm not the smartest guy in the borough. I mean, not smart, not that smart. But it makes sense to me that if I'm in a recession, I don't think retail sales would be going up. I don't think so. I don't know. Maybe I'm wrong. Y'all check me on that. Maybe I'm wrong. But I don't think if I'm in a recession where people are struggling, that retail sales would be going up. It wouldn't. That's number one, right? That's number one. Number two, the Atlanta Fed has come on record saying the estimate for GDP for Q3 is going to be 2.5%. Q2 was 3%. Help me out here. Y'all help me out here because I know we got people smarter than me in the chat, soybean billionaires in the chat. If I got a 2.5% GDP, just coming off a 3% GDP, I don't quite think that's recession. Is it? Maybe. So let me make sure I get this straight. We got retail sales for August going up. We got an estimate for Q3 GDP at 2.5, coming off a 3 for quarter two. And we're getting ready to have a new money supply introduced back to the economy. I don't know. That doesn't sound like a recession to me. Sounds like the recession has been canceled. But you guys have to figure that one out. I'm just telling you what my thought process is. When I look at the data don't support that. Now, whether it'll come to a recession or not, I don't know. And what's the definition of a recession? What is the definition of a recession, guys? Please, anybody tell me what the definition of a recession is. Give me your definition. Anybody give me their definition of a recession. Well, I'm going to give you mine. Well, you have gross domestic product, negative gross domestic product, negative GDP for 2 quarters in a row. Technically, that's a recession. Have we had that? Can somebody tell me the last time we've had 2 quarters of negative GDP? When was the last time our economy here in the United States had 2 consecutive quarters of negative GDP? Please, somebody help me out. Somebody help me out. Have we had it in 24? Did we have it in 23? Somebody help me out with that. Come on now, all y'all want to be experts. Come on. Everybody want to be an expert. Everybody in the chat want to be live chat experts. So some of you live chat experts, come on now, help me out. Because I don't know what I'm talking about. I'm just some weird guy on YouTube trying to get YouTube revenue. I'm just some weird guy on YouTube trying to get some YouTube revenue. Please tell me the last time we had 2 consecutive quarters of negative GDP. Since we're going into some recession all of a sudden. See, I keep telling y'all better watch these Wall Street traders, man. You better watch these 1%ers, man. Watch these folks. They got y'all thinking if the Fed reduced rates 50 basis points, that's mean we going into recession. When we ain't had 2 quarters of negative GDP the last time I can remember, we haven't had it all this year. We haven't had negative GDP one time this year, guys. We didn't have it in Q1, we didn't have it in Q2, and we're on pace not to have it in Q3. So why would there be a recession? Oh, if the Fed reduced interest rates by 50 basis points, that means the economy's in trouble. See, this is the propaganda they pump into your head to keep you on the sideline. You don't even try to go out and look at the data, though. You don't even try to go do no research. You listen to these Wall Street aliens tell you, oh, if they reduce interest rates by 50 basis points, that means the economy's in trouble. Well, there's no data in 2024 that says our economy's in trouble, though. Please put some data on the live chat screen. Some of you live chat experts, please put some data on the screen, you live chat experts, that shows our economy is in a recession. Please give me one piece of data from 2024 that supports that. GDP numbers don't support it. Retail sales numbers don't support it. So what supports it? Oh, the labor market, the jobs market, it's softening. It's softening, that's it. Okay. GDP still strong in a mug. Retail sales still strong in a mug. So, yeah, we got a softening there. But guess what's getting ready to happen to that softening? See, here's what y'all got to understand, guys. I keep telling y'all, interest rates being reduced is a stimulus package. Y'all don't want to listen, though. Some of y'all these Wall Street aliens got y'all whole mind just messed up. Because that's a stimulus. You do know that's a stimulus package, right? You do know interest rates coming down is a stimulus package to jobs. You do know that, right? You do know that's one of the reasons they reduce interest rates to introduce a stimulus package to the labor market. Why is that a stimulus package? Well, companies, right? They kind of big deal in the labor market. Companies are the one that's hiring people. So if I'm a growth company, or if I'm any little mom and pop company, and I'm struggling right now, but I got a good product, I got a good service, I just need some capital to infuse into that to grow it. When rates come down, guess what I can do now? I can go to my bank and say, hey, rates are 50 basis points lower. I can afford to pay you back this loan now. Lend me the money. Yeah, Richard, we'll lend you the money. We'll give you the $250,000. How many people will you hire? Well, I'll tell you what, Jim, I'm going to hire about 10 people with that $250K, and we're going to grow our revenue another 10 or 15% in the next 2 years. How do you think about that? I love that, Richard. Oh, God, absolutely. We'll have the paperwork ready for you on Friday. See, it's a stimulus package, but some of y'all don't get that. Y'all just listen to these people on Wall Street and think y'all know everything, but you don't because they're fooling you. It's a stimulus package to the economy. It's a stimulus package to the labor market. You do know that, right? You do know when companies can borrow money 50 basis points cheaper, it goes to the growing the business, hiring people. And in turn, what does that do? Kickstart the economy, stimulates the economy. So stop it with this, oh, they lower 50 basis points. That means we're in trouble when you got no data that supports that. You don't got one negative quarter in GDP in 3 quarters. You don't. You don't. We're 15 days, not even 15 days before the 3rd quarter is up. You got no data, no retail sales data, no GDP data to support that. And you got rate cuts coming that will stimulate the labor market. So listen, man, I'll tell you, man, some of y'all just misinformed, man. But you want to be. You don't want to be informed. You want to be misinformed, some of y'all. Let's keep moving. Wealth builders, I appreciate y'all moderating the chat. Thank you so much. I owe you one. I need you back here every day moderating the chat, just to make sure we keep the chat in line. Thank you so much, wealth builders. And by the way, at any time now, you can get down in the description box and click on that Moomoo link and open up your new Moomoo account, new Moomoo brokerage account. Put your $100 in there. You're going to get 5 big boy, I didn't say blue chip, I just said big boy, publicly traded stocks. You put $1,000 in there, you're gonna get 15 big boy publicly traded stocks. Guys, get in where you fit in. Get down in that description box and click on that Moomoo link and sign up today. Get yourself in position for these next 12 to 18 months. This is the wealth transfer piece. We've already talked about the recession that I've debunked. We've already debunked the recession, that's gone, right? We already talked about this massive explosion that's getting ready to happen. And I've already backed that up with data that supports that from the last 2 rate cuts and what the stock market did in 12 months after the rate cut. We've already talked about that. That's where the massive wealth transfer comes in. See, we'd already debunked the recession. That ain't happening. And I've already told you how you transfer some wealth to yourself. But you got to have a brokerage account to do that. So get yourself down in the description box and click on that Moomoo link and open up your Moomoo account. Put you some money in there. Send me an email through my website, www.richardfain.net. Send me an email. Let me know you've opened that Moomoo account. Let me know you funded it. And I'm going to send you some tutorial videos to help you learn how to use the app. By the way, it's my primary app that I use in 2024, by the way. Just a little bit of FYI. That's my primary app. A lot of the wealth builders use it. Some of the wealth builders don't use it. That's okay. They understand my point here is to try to provide people with financial tools. If it's a tool you don't need, don't open it. If it's a tool you like, try it. What's the worst case scenario if you try it? The worst case scenario is you get 5 or 15 free stocks. That's the worst case scenario because they don't charge you any fees. There are no fees. There are no commission fees. There are no monthly maintenance fees. There are no usage fees. So if you get the app, transfer your money in there, make you a few trades and you don't like it, guess what? Shut her down. Go on about your business. Take your 15 stocks with you. I don't know how you do it. For me, it's world class, or I wouldn't be using it. For a lot of my wealth builders, they use it, but they also have other brokerage accounts. Ain't nothing wrong with having multiple brokerage accounts, guys. So y'all got the 1% got y'all all discombobulated. See, these 1%ers got y'all discombobulated. I'm going to only use TD Ameritrade. Let me ask you a question. When the last time TD Ameritrade gave you anything for free? Never. When the last time any of these major full-service brokerage companies gave you anything for free? They haven't, and they never will. That's the point I'm trying to make. You have allegiance to somebody that ain't giving you nothing. Nothing. They ain't giving you nothing. But that's who you got your allegiance to. To make somebody else wealthy, they don't give you nothing. At least you're getting 15 free stocks from Moomoo. And then guess what Moomoo's going to do? Every time you refer Moomoo to some of your family and friends, your colleagues, your church people, your pickleball group, your deer hunting group, whatever y'all people do when you ain't watching me on YouTube. Whenever you refer anything to those people, guess what Moomoo gonna do? They gonna give you more free stock. I bet you TD Ameritrade ain't doing that. I bet you TD Ameritrade ain't gonna do that. I bet you no other full-service brokerage account gonna do that. They not give you nothing. You can refer them all you want to. They're not gonna give you no referral fee, more stock to do that. They're not gonna do it. They're not gonna do it. So all I'm telling you, man, is you can create a little side hustle out of this thing if you knew what you're doing. You get your Moomoo app going, start your little side hustle. This is what I would do. I'd open my Moomoo brokerage account. I'd put my $1,000 in. I'd get my 15 free stocks. I'd look at those 15 free stocks. I'd say, okay, big boy, big boy, big boy, big boy. I don't really like this company. I'm gonna sell that one and replace it with this one. I like that one. I like that one. I don't like that one. Let's sell that one, buy something else that I do like. Like that one, don't like that one. Sell that, buy one I do like. Okay, boom, got me 15 good stocks that I like. Now I'm gonna take my $1,000 and I'm gonna go ETF hunting. I just told you what the S&P did the last 2 rate cuts. I just told you. Do you really think that's not gonna happen again? Now, no guarantees, but history says it will. No guarantees now. So what I would do is I'd go ETF hunting with my $1,000. I got my 15 free big boy stocks. Then I'm going ETF hunting with my $1,000. So, but this is how I create the side hustle now. Listen carefully. This is how I create my side hustle. So now I got my $1,000, it's in ETFs. I got my 15 free stocks. Now I'm gonna say to myself, okay, who else can I share this opportunity with? Let me look at my Facebook group. Let me look at my TikTok group. Let me look at my Instagram group. Let me look at my X group. Let me look at my Bingos with Friends group. Let me look at my fishing buddy group. Let me look at my golf buddy group. Let me look at my hair salon group. Let me go look at my friends and family group. Let me go look at my church group. Let me go look at my Monday night football, Sunday night football group. And I'm going to share this opportunity with all those people. And every time one of them decides to try out Moomoo, Moomoo is going to give me a little cha-ching in stock. And I'm going to put that cha-ching in stock in my free stock group. And that's going to be free wealth that's going to continue to build and build and build for years and years and years and get me to my financial freedom. That's my side hustle. And all of these stocks are for free from Moomoo. That's all you got to do, guys. But see, we too short-term thinking. A lot of us don't think long-term like I just thought long-term. See, that's what you should be doing with the Moomoo app. See, a lot of y'all are just too close-minded to understand it's an opportunity for you to build wealth for free if you just do it right. But some of y'all won't do it. Too loyal to TD Ameritrade. We ain't gonna give you nothing. Not one dime. Nothing for free. Matter of fact, they might even try to charge you. I know some of y'all are lit by that, but I don't really care because it's the truth. So if any of y'all want to understand and learn how to do that, get yourself down in that description box and sign up for Moomoo. Put your money in there, get your free stocks, then send me an email through my website and say, Richard, I've opened my Moomoo account. I want to learn, what were you talking about with this whole, I can use Moomoo and refer them to people and Moomoo gonna give me some free stocks, and I'll send you the information, guys. It's right there on the app. They tell you right there in the app that if you refer the thing out, they're gonna give you free stocks. But see, some of y'all all y'all worried about is all the wrong things. It took them 3 days to transfer my money to me. I don't like that. Like it's Moomoo's fault that your bank took 3 days to transfer the money. You do understand there is the receiving bank. They got no control over when your bank, the sending bank, sends the money. You do understand that, right? But see, this is what we get hung up on. We get hung up on that. Instead of saying, how can I use this app to build wealth and make money for free? How can I do that? How can I do that? How can I use this Moomoo app since I know their marketing is about referral, not paying some network millions and millions and millions of dollars for a 30-second commercial? That's not how they market. That's not how they get their customers. They get their customers through word of mouth, through giving people like Richard Fain and people like you who use the app properly free stock for doing what? Referring. And then another one. They're a Chinese company. They're a Indonesian company. They're a UK company. Who gives a rat's? You do understand here in the United States, there's a such thing called the Securities and Exchange Commission. You do understand that, right? You probably don't, though. You do know any brokerage company doing business in the United States is monitored by the Securities and Exchange Commission. You do know that, don't you? You do know Moomoo is headquartered in New Jersey. You do know that, don't you? Probably not. You didn't do any research. You didn't do any research. You didn't know any of those things. I don't care if they came from Pluto. If they're going to give me free stock for referring them and it's a world-class brokerage app, I'm referring it. I don't care if they're from Pluto. I don't care where they're from. Because I know the Securities and Exchange Commission would not allow any broker or any brokerage app to exist in the United States unless they were on the up and up. You do know that, right? You do know there's a certain thing as a Securities and Exchange Commission, right? You do know Apple produces most of your iPhones and all this other crap y'all buy from in China. You do know that, right? You do know that, right? I don't know, maybe you don't. You do know probably the most valuable company in the world produces their product in China, right? You do know that, right? Maybe not. Maybe you don't know that because you don't do no research. All right, let's keep moving. Let's keep moving. Let me wrap this thing up. Let's see where we're at here. And we're going to wrap this thing up. So investors, while investors expect a cut Wednesday, the market is divided on the size of the potential reduction. Traders are currently pricing in a 63% chance that the central bank eases rates by 50 basis points, according to CME Group's Fed Watch tool. That is up from roughly 47% chance last Friday, but slightly lower than 67% earlier forecast on Tuesday they're talking about yesterday. 1 basis point equals 0.01%. A steeper rate cut may spark concerns about the health of the economy. So I just debunked that with research, with history, with data. I just debunked that. There is no fears of a recession. You got August retail sales going up. You got third quarter estimate for GDP, and we're only like 2 weeks before the third quarter is up. at 2.5%. So there is no recession on the horizon, guys. This is all propaganda designed to scare you and keep you on the sidelines so you don't buy into this thing. So you just stay there scared. That's all it is, guys. Go look at the data. Don't just listen to these guys. It's propaganda. And I'm pointing it out. They can miss me with all that propaganda. Went right by me. See, here's more propaganda. A 50-point cut may further imply a downgrade of the Fed's view on the labor market. No, because the 50 cut is going to be a stimulus package to the labor market. It's going to be a stimulus package. That's what it's going to be. A nice little stimulus package for the labor market, guys. Companies borrow money when they can borrow it cheap. That's a stimulus package. So this is just all propaganda, right? It's all propaganda. It's all propaganda. I think there's going to be a pretty big deviation between what the market is expecting and what the Fed is going to project. Now, we don't know at 2 o'clock, 2:30, what the market's going to do short term. The Wall Street aliens are in still control of the stock market. So we don't know if it'll be a sell-off, a bounce. I believe there will be a bounce, but it could be a sell-off. Who knows short term, guys? But history tells us in 12 months, long term, 12, 18 months, history says the overall stock market has done better in the last 2 rate cuts. That's what history says. So I'm going to hang my hat on history, and I'm going to project out for the long term. I'm not going to worry about the short term. If it does sell off, dip season. Dip season. I win either way. If I'm in dip season or if it bounces, I win. I win if it bounces because I'm in the market 365 days a year. So I miss no bounces. If it dip season, I go to the reserve cash, pull out some reserve, and I go to dip season shopping. No big deal. I'm still going to hold long term, and I'm going to still make money. I'm going to still make money. Who cares? I'm not on pins and needles about today. I don't care which way it goes, to be honest with you. I'm going to make money regardless because I know exactly how this thing works. It's a continuous bull market. It's going to work. It's going to work. So there you go. Let's see what's going on. Let's see what's going on real quick. Oh. Okay. All right. A little brief. Nvidia is down to 114, guys. 114.27. We'll see. We'll see what shakes out. Stocks are little changed as traders debate how big the Fed's anticipated rate cut. See, that's the thing though, right? That's the propaganda, right? That's the propaganda right now. All propaganda in my opinion, but that's okay. I understand what's going to be happening. We'll see. We'll see exactly what's going to be happening here. Oh, here's one right here for you. Here's one for you. Here's one for you right here. Is it unusual to have this much of uncertainty in the Fed decision as the central bank typically tries to telegraph its next move to the markets? Traders have believed for the most of the last month that the Fed would lower rate by a quarter, but the idea of a supersized cut began to gain traction in the past week. You'd have to go back 15 years to find such an uncertain situation this close to the decision. A lot of money will be made and lost today. That's what the head of Dutch Bank Global Economics said on Wednesday. The ushering in of a cutting cycle is expected to shore up a stalling economy and further boost an already strong market, with the S&P at a record following an 18% gain this year. History shows the benchmark average gains of about 16% in the 12 months following the Fed rate cut. So let me get this straight. I made 18%. Matter of fact, I made 19% on SPLG. I made 19% on SPLG for the first 8.5 months. That's a 19% gain. Now, over the next 12 months, you're saying I can pick up another 16% from what history says the S&P will do. I don't know about y'all guys. I mean, my God, 15% rate of return on average over that time. Man, come on, man. That's a no-brainer. Because you already know if the S&P's doing that, what do you think growth stocks are going to do? If the S&P can do 16% over the next 12 months, according to this expert, what do you think growth stocks are going to do? If the S&P's doing that, whew, man, y'all better get in where y'all fit in, brother. I'm telling you right now, this thing is no joke. Get in where you fit in. Hey, I saw this little article on Nvidia. Here's the headline. Nvidia stock picks up a new bull who says there's still room on this train. A William Blair analyst shares Nvidia's moat and margins while also weighing in positively on Broadcom and ARM shares. Nearly all Wall Street analysts are bullish on Nvidia's stock. Now, another has joined the pack. That's William Blair's Sebastian Nige, who initiated coverage of Nvidia shares with an outperform rating on Wednesday before his call. 59 of 63 covering analysts tracked by FactSet rated Nvidia shares the equivalent of buy. Najee's initiation makes that 60 out of 64 Wall Street analysts rated a buy. He titled his note to clients, "Still Room on This Train." Nvidia shares are up 133%. Thank you. I'm a Nvidia guy. I'm up. So thank you. For all you people out there, oh, it's too late. There's no money to be made. Okay, well, 133% in 2024. I don't know if that means there's money still to be made or not, but I'll take 133%. I don't know about y'all. Ain't no money to be made in it, though. From what y'all saying, oh, no money to be made in it. There's no money to be made in it. But yet and still, you made 133% this year if you were in the stock from January. Okay. No money to be made in it, though. So let's keep moving. So far this year, ahead nearly 700% since the start of 2023. If I could only go back in a time machine, if I could only go back to January 1, 2023 and put it all on black. Whew. I try not to think about that. Could you imagine getting in your old time machine, putting the time on there, January 1, 2023, and you hit the time machine button. Poof, it blow you back in your seat. Poof, pull you forward. Open up the door. Poof. Jansen Wong standing there. Welcome, Richard. How much do you want to buy, son? Well, Jansen, I'm going to put it all on black. What do you think? Well, Richard, I think you're going to be a trillionaire. Go ahead and put it all on black. I shake his hand. I get back in the time machine, push the button, come back to the present. When I get back to the present, I'm on a 100-foot yacht. When I get back to the present, I'm on a 100-foot yacht. When I open the door of the time machine, I'm on a 100-foot yacht. With a helicopter up there. I got a helicopter on the top of my 100-foot yacht. Whoo! Okay, let's get back to the real world. Unfortunately, I didn't buy it in January 1, 2023. I wish I would have. Boy, I wish I would have. What? You know how rich, oh, goodness gracious. Do you know how much money I would have right now? With a 700%. Just think about my 11,200 shares right now. Just think I bought them 11,200 shares on January 1, Matter of fact, it'd probably been 20,000 shares because the stock price wasn't that high. Just think about it, I had 20,000 shares. 20,000. Think about it now. Them 20,000 would have turned into, oh my God, what would that turn into? 200,000? I think with the 10-to-1 split, right? Yeah, with the 10-to-1 split, I would have had 200,000 shares of Nvidia stock right now. Oh my goodness. Let me just do the math on this real quick. I'm sorry. I know I'm off the rails here, but oh my goodness. 200,000 times 115. Oh, $23 million. Oh my goodness. Oh, I don't even want to think about that no more. Let me stop. But you know something, guys? Here's the interesting thing about that. There are people who did that. There are people who did that. And right now got $25 million just like that in 1 year. 1.5 years, almost 2 years, they up $20 million. There are people who've done that. See, I missed that opportunity, but I won't miss this next one. I won't miss this next one, guys. I'm not missing this next one. I'm telling you now. And wouldn't it be nice if this thing, let's say in 3 years, it split again? Let's say they did another, I don't know, 5-to-1, 10-to-1, well, maybe they won't do a 10-to-1, but maybe they did a 5-to-1. Maybe they do a 3-to-1 or a 5-to-1 in the next 2 to 3 years, and I just keep doubling down. Keep doubling down 10 years from now. Make 20, 25, $30 million in this stock. Ooh, goodness gracious. See, I think big, guys. I'm a big thinker, man. I don't think small. I think big. I think like, anything's possible. This is the kind of guy I am. I believe anything in this world is possible if I set my mind to it and I do the homework and I get in on this thing. Now, that don't mean that for you. You can think whatever you want to think because I'm not a financial advisor and I'm not trying to tell you what to do. I'm just telling you how I think. I'm just telling you if I went back in a time machine and then I came back to the present, what my life would be like. I got a great life now. Don't get me wrong now. I got a great life. But man, 25 mil, that's a little step up. Little step up. I'm just saying, man. So let's move on because we got to wrap this thing up. I got 6 minutes with y'all and then we out of here. Let's wrap this thing up. And then of course today, guys, I will be back on another live stream, probably like 4 o'clock. No, maybe not 4, but maybe like 6 o'clock. I'll be back to do a recap of what happened after the Fed meeting. So I'll be back at 6 o'clock today on a new live stream just for a quick 30, 45 minutes just to recap exactly what happened with after the Fed came out, exactly how the stock market finished, and then give me a little bit of time to see what it does after hours. And we'll talk about that at 6 o'clock p.m. Eastern time on a special live stream for those that want to participate, right? So here we go. We're going to end this thing and get y'all out of here and get me out of here. While Nvidia is best known, okay, we already know all that. I don't need to go into all that. We already know that part. We already know that part. We already know about the GPUs, and they got the best GPUs in the world, and we already know all that. We already know that. We already know all that, so I ain't finna bore you with all of that. So basic in a nutshell, this Williams Blair analyst has came on board. This gentleman by the name of Sebastian Nagy, he's come on board. So now you got 60 out of the top 64 analysts on Wall Street that got this stock as a buy. That's pretty dang on good. That's pretty dang on good confidence builder right there. And of course, I believe good things will happen long term for this stock. I don't know what will happen today. Looks like right now we're in the red. So we got a bit of a sell-off right now. Now, I don't know what will happen once the rate cut hits. Now, that could give us a bounce, or it could give us a deeper sell-off. I don't know. But we have to understand what I've talked about today is not something that happens in 24 hours, guys. This will happen. This wealth transfer will happen over the next 12 to 18 months is where you'll really see the impact of these interest rates come down. You're not going to see it today. You can't walk to your bank tomorrow and say, hey, they reduced interest rates by 25 basis points. Can I get a rate for 3% now? No, you can't do that. It takes a while, right? Like I told you, over the next 12 to 18 months, you'll see 200 basis points decrease in the rates. That's when you'll be able to walk into your bank and they'll say, okay, yeah, we'll lend you for a car loan at 4%, because those rates will already be fully in effect. Now, what they're going to do is they're going to get to what they call a neutral rate, right? They want a neutral rate. And what does that mean? That means a rate that's not too high like it is today or too low. They don't want it too low because that'll increase inflation or at least give inflation a chance to increase itself again. So they don't want it too low, but they don't want it too high so that the economy is stifled. They wanted what they call a neutral rate, which is where they will keep it. So if you go back to prior to the pandemic, prior to 2019, let's go to 2018, we had a neutral rate. That neutral rate wasn't neutral when we got to the pandemic. What did they do in order to stimulate the economy when we were in the pandemic? They took that neutral rate and did what with it? Took it to zero. Why did they take it to zero? Because it's a stimulus package. I keep telling y'all this. When you take rates down, it's a stimulus package to the economy, especially when you take them to zero. See, when you go to zero, guys, that's a stimulus package to the fullest magnitude, because that means banks are basically borrowing money for nothing from each other. There is no Fed funds rate, it's zero. So therefore, I can go to my bank and get a rate at 2% for a car, or 1.75. I've even gotten rates at 1.50 from my credit union for a new car when rates were zero. That's how you stimulate the economy, guys. People will go out and borrow money at those cheap discounted rates, and they buy stuff. And in turn does what? It brings money to the economy. 70% of our economy is predicated on consumer spending. But we're not at that point today. Where we're at today is we have elevated rates, which do what? Keep people from borrowing money, keep companies from borrowing money in an effort to bring inflation down. We've accomplished that. So now it's time to come from this elevated rate to a neutral rate. Well, is the healthiest for the economy. We talked about what's the mandate of the Fed, two big mandates: price stability and what? Maximum employment, right? They want maximum employment and price stability. So they're going to bring it to a neutral rate that gives us both of those things. And that's what they will work towards over the next 12 to 18 months, taking it from 5.5 elevated to about 3.5, 3.75 neutral, and they will leave it there and see what happens, right? So there you go, man. Appreciate y'all rocking with me today. Like I said, get yourself down to that description box and click on that Moomoo link, right? Sign up for Moomoo, guys. I've already run you through the side hustle with Moomoo. There's a side hustle to go with Moomoo, guys. Take advantage of the side hustle. Build your wealth by getting this free stock from these folks. They're going to give it to you because that's their marketing arm. This is how they market their business. They don't pay millions of dollars to advertisers on TV. They market on social media, and they give free stock away for you to tell people about them, right? So turn this thing into a side hustle. Get down in the description box, click on the Moomoo link, open up your Moomoo account today, go get that free stock, go get that free money, send me an email through my website, let me know you opened it, let me know you funded it. I'm gonna send you the tutorial videos, and I'm gonna send you the link that'll tell you all about the side hustle. I'm gonna send you the link that'll tell you about the side hustle for Moomoo. It's a side hustle, guys. Now, what I do, it's a side hustle. It's just at a different level because I got a YouTube channel with 700,000 people on it. I got a YouTube channel that 15,000 people watch every day. So it's different for me. But for you, you don't have to have all of that. All you got to do is have a close network of people and just tell them about it. And get yourself some free stock. Put it in the portfolio. Keep what you need, sell what you don't, replace it. The dollar cost average, put those into the ETFs. The free stock, the individual stock, you can get from Moomoo. And then what you do with your $1,000 a month you put in, or your $500 a month, or your $250 a month, do fractional shares into some big boy blue chip ETFs. Again, guys, not your financial advisor. I can't tell you what to do. I'm just trying to help you get to where you need to get to with your wealth from a guy that's done this for 30 years. I'm not a financial advisor. I can't tell you what to buy. So don't send me no emails about tell me what to buy, because I can't. Now, I can send you my video where I'm telling you what I'm buying, and if you want to copy that, you can. But I can't tell you what to buy. So no emails about telling me what to buy, because I can't do that, guys. I'm not a financial advisor. But I've just walked you through the blueprint. I just told you what history says the S&P 500 is getting ready to do over the next 12 to 18 months. I walk you through the blueprint. It's not that hard, guys. Just trust the process. Follow the blueprint. Like I said, get down in the description box, click on that Moomoo link, get that Moomoo signed up, get your money in there, get your free stocks, send me an email through the website, and then I'll send you all the rest of the information you need. All right? Last thing, wealth builders. Y'all see the t-shirt. Wealth builders in here. Could y'all please, before we get out of here, I want all the wealth builders that's still in the chat, drop it down in the live chat that you're a wealth builder, please. Please drop down in the chat real quick that you're a wealth builder. See these wealth building t-shirts, guys? You're gonna see some wealth builders in here in the chat. These are my financial family. This is my financial family that I rock with from the seed. A lot of these guys from the seed, right? So appreciate my wealth builders that were in the chat, all through the chat. I know some of them have had to pull the cord and get out of here, but some of them are still here, as you can see right there. Some of them are here. Guys, if you want to join the wealth builders, get down in my description box and hit that second link, which is Richard Fain Millionaire Mentor website, www.richardfain.net. That's where the home of the wealth builders is. You can go to my website, click on that join button, click on that membership button, and get yourself over to Patreon and join the fastest growing financial community on Patreon. Become a wealth builder. Just like your boy got right here on the t-shirt. I want to say another shout out to Miss MJ. She and her company are the ones that put these together. And I've already told the wealth builders I'm going to be buying a big supply from Miss MJ, and I'm giving the t-shirts away for free for wealth builders that actually get on into the community chat and participate and help people. I'm going to be sending them out brand new free t-shirts, right? That's what I'm going to be doing. That's my gift to them for their loyalty of being there to help people. You help enough people get what you want, you get what you want. They don't have to pay for no shirts. But guess what? Miss MJ gonna get paid because I'm a payer. They gonna get the shirts for free. So if you want to join these wealth builders, man, and get yourself with 1,000 people to support you, it's up to you, man. Or you can stay in the matrix and be by yourself. It's up to you. It's up to you. We ain't trying to be experts here. None of us are experts. We're just people who are dedicated to building our wealth, to change something for us and our family so that we don't have to be dependent on the 1% for the rest of our life. We want to be independent, and we're going to do it together. And it's called the Wealth Builders. Come join us. We'd love to have you. Well, all right, guys. Appreciate y'all. I'll see you back at 6 p.m. where we're going to talk about rate cuts and what the market did with those rate cuts. And y'all already know I'm going to give y'all my spin on it, right? So if you want to be a part of that conversation, you want to be in the live chat, get yourself back here at 6 p.m. Eastern time. But until then, keep the main thing the main thing. Keep the main thing the main thing, right? Stay strong, stay long. Hit that thumbs up button before you get out of here too. Thoughts become things. See it in your mind. Hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'm going to catch you guys on the next one. Nvidia to Uranus. Peace.